Thanks, Vivek. I'm being joined by Mayuresh, Joshi of Angel Broking to give us his call on some stock-specific strategies. Mayuresh, let's start by getting your call on the index.
Morning, Sunanda. So clearly, I think if you talk about how the index might move from a short-term perspective, the earnings season has kicked off with Infosys, which was a mixed bag. And clearly, I think if you look at earnings coming through, expecting a very sluggish kind of a top-line growth for most companies within the Sensex. In fact, might be negative top-line growth. And again, I think the margin expansion for a few sectors might be evident because of the input cost decline. But I think the overall scheme of things still remains the same, considering where the index is, the valuations are, and where earnings are expected to pan out for the better part of FY16. Our take is they're fairly valued at the current juncture. So yes, I think 100-200 point more on the Nifty from the current level, technically, or from a trading perspective, is not ruled out. However, we still stick with our range of 7,600 to 8,200 on the Nifty. And again, I think the BR elections, when the results come out in November, will be a sentimental, we will cause a lot of impact in terms of sentiments for the market. So any positive outcome thereof will be taken very, very positively by the market.
Okay. Mayuresh, you have 3 stocks on your radar, but I very quickly want to talk about Mindtree. Earnings are on Wednesday. From the mid-cap IT space, do you have any picks that you would be looking at?
So, Sunanda, I think at least at this point of time, we're probably modeling in top-tier IT counters and preferring that more to the mid-cap space. Again, I think our take is based on the premise that the constant currency growth for the top-tier IT companies in an environment we are talking about the verticals like energy, insurance, telecom, actually growing to a slowdown, and client discretionary spending on these 3 verticals being a very key forte for a lot of these companies. So clearly, I think I think the top tier companies will perform relatively better compared to the mid-cap universe in terms of constant currency growth. B, I think the kind of wage hikes and visa impact that you probably saw in Q1 would relatively start tapering off in Q2, Q3. And though second half of the calendar is a traditionally weaker quarter for a lot of IT companies, I think client mining, discretionary spending coming back to a certain extent, a few verticals, I think should have the trajectory in terms of constant currency growth for most companies quite stable. So I think top tier companies is something that we're preferring. So Infosys, TCS, HCL Tech is something that we continue to like.
Okay. You have TVS Sri Chakra, a price target of 3,210 on that one?
Oh, yes. And again, I think if you look at the kind of structural changes that the tire industry is going through, yes, I think till Q1 results, I think a lot got embedded in terms of how the raw material prices have panned out, including rubber prices, crude oil derivatives, and so on and so forth. So I think the margin expansion was quite evident. But again, I think the company's performance from this quarter onwards will be more to do with how the auto industry performs. And clearly, I think our take is that looking at the way radialization is taking place, looking at the way the growth for the industry is expected to pan out, tire companies will benefit from this perspective. So for TVS Sri Chakra specifically, I think it's a key client on the motorcycle is being a steady performer. It is scaling up its business. So in terms of the OEM market leadership position, it will continue to maintain that. In terms of numbers, our own take is top line growth can grow at a pace of 12.5% over the next 2 years, close to that 2,400 odd crore mark. We're expecting operating margins to stay within that 15-16% range because of the fall in crude and rubber prices that we've witnessed. And consequently, I think the profit growth can be quite stupendous from the current levels. So clearly, I think even in terms of valuations around 10.6 times, we believe it's quite attractively priced. So a target of 3 to 1 0 based on earning multiple of 12 times FY17 number.
Okay, Surya Roshni as well. On a 12-month basis, you have a price target of 183 on that one.
Oh, yes. And again, if you look at how the numbers have panned out and government focus probably in terms of the LED structural shift taking place, I think it's a very positive sign. So I think our own take is if you leave aside the steel business, which is having huge amount of debt, and if you look at the standalone business in terms of Lightning, we expect the company to post a 6.5% top line growth. The margins that the company puts, we're expecting could follow through, come through. So the margins are expected to improve close to that 8% mark in terms of absolute numbers when it comes to FY17, and consequently the net profit is expected to grow at 22% to 80 odd crores. So I think the steel business is having structural issues, but the company is trying to get into alternate products when it comes to steel as well. So I think the volume growth should be quite stable again. They're probably getting into the manufacturing of square hollow pipes, which can be used for civil structures. So in that sense itself, I think there might be some stability happening on that front. But clearly, I think the lighting segment itself is a huge cash cow for the company. It's a huge value ticker in terms of margins, in terms of bottom line. And again, I think the numbers should pan out quite impressively over the next 2 years. So yes, I think at the current market price, trades again at around 7.7, 7.8 times. So we've got a target multiple of 10 times for Surya Roshni. And so the target is based on these multiples at 183.
Siaram Silk as well, Mayuresh. What's the call there? What would you recommend for someone who's possibly interested in that counter?
So clearly, I think textiles is one space which was buzzing for the past few months. But CRM Silk is clearly, I think, our take is that they have a market leadership position in blended fabrics, which contributes close to 75% of their top line. And even if you look at the volume growth in this segment itself, it's been an impressive 9.6% in the quarter gone by. If you look at the other business segment, which includes garments, the one.
All right, Mayuresh, thanks for that. Siaram Silk is absolutely flat today, but he has a bullish call going on that one, especially as far as the textile as a sector has been in focus. Let's take a very quick break. When we come back, Unichem and Zensa Tech gaining in trade today. We'll tell you why on the other side. Stay tuned.